Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined this week by Shiraz Mian. And we brought you two interesting, dynamic number ones, of course, to end the year. And Shiraz is doing one of the big industrials. I'm covering a solar company. Yes, it's true. I've picked Jinko Solar, ticker JKS, as my top stock pick of the week. And it is a Chinese company, which, as many of you know who know me, would consider it kind of rare that I'm talking about a Chinese company. But the solar stocks have been kind of forgotten for years. Way back in the first decade of this century, they were the hot stocks, the latest thing. Everybody was going to be in solar. So these stocks were surging, and then they went into a bear market for just about a decade or so. Are they coming back out? Let's take a look at some of the fundamentals, because I think you'll be surprised at what you see. So here's what's happening with the earnings estimates. And this is a little unusual for many companies to see this kind of growth. See that bottom area, the magnitude consensus estimate trend? We have 2022 now at 306. One estimate has been raised in the last 60 days. But take a look at the next column over, the 2023 column, 618. That's a gain of 102%. Who's doing that into next year, the recession year, the year of horrible earnings? I don't know many, maybe not even energy is doing what this is. So what is happening here with the solar names? They also had, Jinko's expected to have the big gains this year too, 80%, as they only made $1.70 last year. There's a change brewing in the solar names. Let's look and see what it's doing with the earnings surprise and just the overall 5-year chart. I like to use this chart to look at the 5 years because it's kind of clear what's been going on. Look at those bearish years, 2018, 2019, even 2020 when the pandemic was starting. Tons of misses, the shares doing nothing, just going sideways. Then you did have a big beat in 2020 during the pandemic. Shares soared like we saw with a lot of stocks, but they've just kind of been in this other narrow trading range. Now they are on the downward slope right now as we end 2022. Year to date, the shares are down about 12%. That is still beating the S&P 500, which is down 19%. But over the last 3 months, down 23%. You can see that peak there in 2022, and now it's trending lower. I would look for that early 2022 as some kind of stabilization point right around 40 there. But I would also look back at the 2021 lows as possible resistance as well. But if it stays in this narrow trading range, that means, the shares are still cheap. We've got the doubling of the earnings for next year. They're trading at just 13 times right now. So I might be able to get them even cheaper as it continues to sell off here. But, it's really all about the earnings and what's happening with those. And this price to consensus chart really shows us what's happening. So it's been a struggle the last couple of years, as I mentioned, because all of the solar hasn't really lived up to the hype of the last decade. But that might be changing now, because look at those charts for 2022. We have a nice gain, like I said, 80% on the earnings front there. Then we're going to double it apparently for 2023. The analysts are very bullish, but look at 2024 already. Now that's over a year out, but the analysts even more bullish for 2024. So change is brewing in the solar space. You might want to take a look at some of these stocks, especially on further weakness. But solar, interesting area, and Zacks #1 ranks strong buy. So for 2023, and you're looking at these top stocks, you might want to go out of your comfort zone a bit on some of the names. Ones you haven't looked at for quite some time could be the stocks to watch in 2023. But I'm going to throw it over to Shiraz now with an old industrial favorite that also was out of favor for a couple of years, but maybe is coming back in. Over to Shiraz.
Thanks, Tracy. The stock I'm featuring is well known, needs no introduction. It's Caterpillar, CAT. Caterpillar is literally on fire. The stock is, it's trading close to its 52-week high. Has had an amazing run, and one could argue that this is as good as it gets, and the move from here would be to the downside. I'm arguing against that thesis, and I'm presenting it not as a tactical trading idea, but as a core long-term holding in a diversified portfolio. And the reason for that is that Caterpillar's business, the global drivers for Caterpillar's business, I believe there is a long-term runway that should help maintain the stock price momentum that we have seen lately. And this trend should continue for the next few years. About 40% of the business is tied to what they acquired through the Bucyrus acquisition. That's the broader mining part of the business. And unless you fall in that category that is looking for the Ukraine situation resolving itself peacefully in the not too distant future, that the commodity momentum we have seen subsiding significantly. That's not my view, but if you are in that camp, then obviously Caterpillar will not be a pick for you. I think the momentum for the broader mining space, including energy, is multi-year and very favorable to all operators in the broader mining space, Caterpillar in particular. Beyond mining, the 60% of the business that's tied to construction, infrastructure, the drivers for that, particularly in the US, remain strong. I acknowledge the housing downdraft, but on the non-commercial side, the momentum is there. We have had legislative changes lately that should help maintain momentum on the non-residential side, both manufacturing as well as otherwise. And the sum total of that should help sustain the positive revisions trend that we have been seeing in Caterpillar shares lately. And that trend should continue in 2023 and beyond. It's a fortress balance sheet, always was. They have protected their dividend even during the weak spots. Currently yields about 2%. But given the favorable cash flow and earnings outlook that I envision, I would expect steady growth on that front. So all in all, a stock in a company that has the key drivers not only very much in place, but expected to accelerate and strengthen as we head into 2023. That's why I'm recommending Caterpillar as a core long-term holding.